Hey everyone, welcome back to Tax Fun with Taxium, the only podcast where taxes are interesting, sales tax is sassy, and marketplaces, well, they might just be the sneakiest thing in your tax strategy. I'm your host, Amanda, joined as always by my partner in tax crime, figuratively, of course, Ronald.
Ronald. Am I in trouble? Jeez.
Yes. Today we're digging into marketplaces. What are they? Who uses them? Why do they matter for tax? And what happens when a seller thinks they're not responsible, but the state says, oh, yes, you are? Let's jump in.
Yeah.
So, Ronald.
Because I'm pretty sure your mom uses Marketplace. But go ahead.
My mom probably does. Let's start at the very beginning. For those who don't know, what is a marketplace?
Yeah, a marketplace is just a place where buyers and sellers meet. We talk about it more in online terms these days, but even before the online boom, malls were marketplaces. The mall itself was the marketplace, and then all the stores, individual buyers would go there to be connected.
It's a good answer there. When do companies use marketplaces?
Yeah, when they want to increase sales. So normally companies, they start with different journeys to getting customers and customer expansion. Maybe it's local advertising, local marketing. Maybe they go to a marketplace at some point after that. But at some point in their sales journey, their sales strategy, they're going to go, hey, we want more clients. How do we get them? A marketplace is one of those avenues, because a marketplace like Amazon may give them more access to customers than they would have had on their own.
Ooh, interesting.
Yeah. Whenever they're ready to get more sales, this is one of the avenues they'll explore.
What are some things they should be aware of?
Ooh, yeah, fun times. Are you familiar, which, I know you are, but with the term marketplace facilitator?
Are we just talking like Amazon and eBay here, or is the list longer than that?
Just in general. So what's the pop quiz? What's a marketplace facilitator?
A marketplace facilitator is a person or business that facilitates marketplace sales.
Yeah, absolutely. So when it comes to what to be aware of, it's the marketplace facilitator laws. And so we've talked about this a bunch, the cat and mouse game between the states and businesses as operations change. But now, as things have continued to change, places like Amazon, eBay, Etsy have kind of drawn the attention around this stuff. But basically, marketplace facilitator laws state that if your person or business is facilitating marketplaces, you are responsible for assessing the tax.
Why is that important?
Yeah, it's important for the marketplace and for the end business there. So if your business is a marketplace, and I'm going to show you this here. I'm going to share my screen in case you're watching on YouTube. But different states have different guidelines around when you're considered a marketplace facilitator and what to do from there. So if your business is enabling other businesses to come and sell to customers, then in Florida, you have to have at least $100,000 of sales, of facilitated sales, to be considered. And then once you are, you're supposed to be assessing and remitting the tax on behalf of all your marketplace clients there. So definitely something to be aware of. We've seen lots of companies who start helping businesses do business, facilitating things in certain ways, putting payments on their platforms to bring everybody together. But in some states, that can be considered being a marketplace. If it is, it does expand your obligations or responsibilities. And I think
That's very good.
that you were trying to ask, sorry, I want to sidestep for a second, was for the businesses using marketplaces, what are some of the considerations? Is that right?
Yes.
Yeah. So along those same lines, just because a business is using a marketplace like Amazon doesn't mean their tax responsibilities end. So it's up to the business to know exactly what they're supposed to do and how, and then follow those guidelines. I'm going to pull up and show you Texas here, talk you through this. Give me one quick second. Okay. So here we go. So here we go. Just read Texas. So as a marketplace seller, you're not responsible for collecting and remitting sales and use tax on your sales through that marketplace. If the marketplace provider has certified they are assuming these responsibilities, if they haven't assumed those responsibilities, then it's basically up to you. to go ahead and collect those sales dollars. So a lot to unpack there. So first, the businesses need to know if their marketplace provider is going to be assessing and collecting the tax on their behalf. So just because we know Amazon is one, but just because Amazon says they're a marketplace doesn't automatically mean they're going to be doing that on behalf of businesses. So as businesses sign up for these platforms, Amazon, Etsy, Shopify, Shop, all these places, they should just go and poke through the terms or ask their rep, hey, do y'all remit the tax? Are y'all a marketplace seller? Or is my company responsible for this? So that's kind of part one, is understanding, what the marketplace is actually going to do for the business. And then, sorry, you go ahead.
Are you saying that could vary by state, that some states would charge tax from the marketplace facilitator and some would charge taxes on the seller?
What I'm saying is some states, let me rephrase that. In some states, sorry, I can't talk today. Fuck. Okay, we're going to start over. Actually, no, we won't start over. Just give me a quick second. I'll cut this middle part out.
Okay.
What I'm saying is going to vary by state. When a state is going to consider a person or business is a marketplace is going to vary. And because of that, businesses using marketplace need to be aware of the rules in those specific states and go ask some questions. Hey, I'm using this new platform. Are y'all considered a marketplace? Do you remit the taxes or am I responsible? Somebody there should be able to give you a quick answer. And then if that marketplace isn't doing it on your behalf, then it's up to you as the business to do it. So the states want their dollars either way. To some degree, they're okay. They don't care where it comes from. You or the marketplace, but they want the dollars.
That makes sense. Kind of goes full circle, right?
Sure, for sure. That's sorry, I cut you off earlier. I wanted to talk more about marketplaces, but go ahead.
I was going to say, assuming that we've got a solid definition of what a marketplace and or marketplace facilitators are now, here's where it gets real. When does a business count as a marketplace facilitator?
Yeah, gonna vary by state. It depends on how many sales they facilitated in some states. Other states, it's like, hey, as soon as you have recognized you're going to be one, you should get registered before you start facilitating these marketplace sales. But again, incumbent on the business to know the state rules, go do the research, and then act accordingly.
Okay.
Say, what did our old manager used to say at Avalara when it comes to sales tax? The answer is always, it depends, is where you start. And then you go look, state by state or jurisdiction by jurisdiction to make sure that you've covered all your bases. But there's almost never one flat, easy answer to anything sales tax related.
Right. And what's our tagline? Not knowing is not an excuse. So ask all the questions.
For sure.
Okay, so let's say that you're a software company that connects buyers and sellers. Do you automatically become a marketplace in the eyes of the state?
Ooh, great question. I would say same answers before. Go look at the state's rules and regulations. Are you doing this for one customer, right? And a couple sales a year? Is this your entire business model? This is so nuanced that, yeah, definitely. And if you don't have the time to go find some folks who can help you get some outside expertise. Yeah, same thing. It's going to vary by state. And I wouldn't assume anything just because Florida says it's $100,000 in sales doesn't mean that other states feel the same way. And so a lot of businesses will, stumble there. There's 46, 45 taxable states, right? Mm-hmm. So having to look through information for every single one of those is a chore. A lot of companies will go and look at up a state or two. If the first two answers are the same, both Florida and Texas are $100,000, whatever, great. I'm going to assume all the states feel the same way. But I don't think we've seen the states feel the same way about anything,
Right.
So yeah, tread carefully and don't assume anything and just go look it up state by state.
Yeah, and we know what happens when you assume.
Mm-hmm.
All right. Is there any sort of accidental marketplace status? Like, could a company think that they're just a software platform but end up being liable for sales tax anyways?
Absolutely. Yeah. And, like you just said, not knowing is not an excuse. So it's not really accidental, right? It's more that you did it on purpose, but just didn't realize the consequences of it, which from the state's perspective, no excuses. So somebody at that company who's making decisions should have somebody they're relying on who can help them understand the implications of said decisions. Because once you do these things, you can't just say, oops, I didn't know, I didn't mean to, you know, I don't think they care.
Yeah, it doesn't work like that.
Yeah.
All right. So now let's say that you're using a marketplace like Etsy, Walmart Marketplace, or even a niche B2B platform. If the facilitator collects and remits sales tax on your behalf, does that mean you're totally off the hook? No filing, no tracking, no nothing?
Ooh, great question. People get so confused about this. So the marketplace remitting the dollars to the state is not the same as the marketplace owning your company's compliance obligations. So whenever a company hits Nexus, they're required to assess and remit tax dollars through those monthly or yearly filings. Those are two kind of separate processes, the assessing and then the filing and the remitting. So even though Amazon is doing some of the assessing and remitting the dollars portion, the companies individually are responsible for doing the complete filings themselves. Only difference is going to be they're going to file it in a way to where it shows that the marketplace sales were taxed and paid by the marketplace, but they still had X amount of sales.
Interesting.
Yeah, super nuanced, but very important that places continue to do their regular filings and not assume that the marketplace all of a sudden just owned their compliance. That's not the case.
Absolutely. So follow up for you. What happens if the facilitator drops the ball? Who's on the hook then? Is it the seller or the facilitator?
Yeah, good question. This is a little bit of finger pointing game where everybody loses. So I would say at the end of the day, you don't want to get into like blame pointing games. Everybody should be accountable for how they're doing things. So, even if the marketplace dropped the ball, each business should have a process in place that's checking along the way to get ahead of these things, right? So who's looking at those filings before they happen? Who's verifying these numbers? If somebody's doing that regularly, you almost never have issues like that because they're going to see the marketplace is broken or whatever, So more importantly, the business should focus on not what happens if something breaks, but who's going to be there to tend to it in case it does.
That is a very good point. Okay, so now I want to get into a topic that we have already talked extensively about, but there's always room for more. Let's go into economic nexus thresholds.
Okay.
Do marketplace sales count towards a seller's own economic nexus threshold, or do they get excluded since the facilitator is technically handling the sale?
Ooh, what do you think the answer is? I'm going to give you a hint. It is 2 words long.
It depends.
It depends. Yeah. I'm going to show you something else here. So this is similar to like the wholesale or the non-taxable items conversation. Does it create nexus? And this varies per state. I'm going to pull up a few of these here. So like in Arizona, their general threshold's $100,000. They do count some services, even if they're exempt in that threshold. What they don't count is sales made through a marketplace. So in a scenario where if you're making $100,000 in exempt service sales in Arizona, you would register and probably end up filing $0 tax returns if everything was exempt. If those $100,000 in sales were instead made through a marketplace in Arizona, that would not count towards their threshold. So you would not register and then not have to remit those filings. And that's Arizona. Let's pick a different one. Florida, same thing, $100,000 total. They exclude sales made through a marketplace. So this is going to vary by state. But yeah, again, this is hard to track individually. Here's Hawaii. I was trying to find one. Hawaii includes sales made through a marketplace. And so, yeah, definitely a lot to keep track of. Make sure you've got, tools or people or processes to account for this stuff, because this is going to vary state by state and these things change all the time.
So basically, the states don't agree on this and we have 50 flavors of tax spaghetti again.
Not just 50, it's in the, I can't remember how many jurisdictions in Colorado, parishes, New Jersey. It's like there's so many more jurisdictions that have their own authority to dictate things, that trying to, people really got to have a process in place to account for all this, because it's not just Arizona or Texas or all of Colorado's the same anymore. There's so many differences within the state.
Oh, interesting. Who would have known that the lesser jurisdictions would have their own facilitator slash marketplace
Yeah.
rules?
A lot of them have the power to create things as they want, and so as they make rules, it's not like we have some nationwide email with tax changes that just comes to us. It's basically up to the business to figure out how often they're going to go check, but they need to be checking pretty often because the states change things all the time.
Yes. Okay, here's a twist for you. What if you're a seller and you run a small marketplace yourself? How does a hybrid model get treated? Someone selling their own goods, but also hosting third-party sellers. Is it two tax rolls or just one big tax headache?
Oh, everything's one big tax headache. And same as before, it's going to depend on the state. It's going to depend on their business setup. Are they having the marketplace be one separate entity and then their business that's selling through it a different entity? Are these things happening together? But to some degree, it definitely matters on one hand. On the other side, how taxes assessed and remitted, that process, that structure needs to account for all these things. So whether they're doing this as a business or facilitator, hopefully their processes and tool set support either one.
Good to know. And when you're onboarding third-party sellers, what kind of documentation do you need to collect to stay compliant? Are we talking resale certificates, seller registrations, or something more?
Ooh, we're going to sidestep because I'm so glad you brought up resale. I forgot to mention this earlier. That's another giant consideration. So in a marketplace, especially the B2B marketplaces, they have features to where you can mark buyers as exempt, so the marketplace doesn't charge them tax. But that introduces another kind of quagmire around the certificate maintenance, collection, and compliance. Because to keep compliant in general, each business is supposed to be grabbing that certificate at the time of the sale, validating it's good for the time in question, for the jurisdiction in question, for the exemption reason in question, and then storing it. But when places use marketplace platforms for that, it kind of breaks that process of what's supposed to happen. So because this is happening in so many, in bulk, a lot of places just click the exempt button and they lose visibility, or they lose, sight into the actual certificates. So after a while, they've made all these marketplace sales, but they don't have a certificate to justify why tax wasn't charged. So definitely be super careful there. If you're on a B2B or an exempt marketplace, make sure that if you're exempting customers through that marketplace, you have a separate process or separate way to get the certificates you need.
Interesting. So basically, it's just audit city.
For sure. Absolutely. Especially on the B2B wholesale side. I mean, it's so easy to just go on there, sign up, get new buyers. But I mean, you're supposed to have a certificate for every buyer in the jurisdiction they want you to ship to. And for some clients we've seen, they may have having 40 certificates, 40 plus certificates for one company, because that company wants to have goods shipped to every state.
Mm-hmm.
And they kind of assume that, well, this and that B2B platform is a marketplace, so they must have collected the certificate and verify that this buyer should be exempt. And that's not always the case. So you just want to make sure that you understand, is that marketplace collecting it? If so, how do you get access to a certificate in case of an audit? If they aren't collecting it, then how do you get the information on the buyer to go get it yourself?
Right.
Sorry, that was not your original question, but
Hey, that's all right. I think that's a very important topic to bring up. And, we have talked about the exemption certificates previously, but in the context of marketplaces, it's important to go over again.
For sure. And again, especially, and we can't beat on this enough, but you got to keep your house clean, because when that piper comes around, they're not looking to give you grace and forgiveness. They're looking to get paid. And when folks start doing things at scale, these little problems you might have noticed as a one-off along the way, the floodgates open. Signing up for these platforms, people may get thousands of orders in a month and the processes aren't tight. Then before they know it, they're not going to be short 50 certificates. They're going to be missing 500 or 5,000. And that's a much bigger problem to deal with, especially when that piper's knocking at your door.
Yeah. Well, we are kind of already on the subject, but let's also talk about other pitfalls of marketplace. In your opinion, what are the top 3 mistakes you see sellers and marketplace facilitators making?
Top 3? I only have one, and that's basically just not understanding the laws around it, not acting accordingly.
Yeah, I would say my biggest one, the one that I've seen the most often, is that people selling on Amazon, Etsy, think that because that marketplace is paying the tax, then they don't have to report it.
Mm-hmm. Oh, that's a good thing too, because folks also don't think about a lot of businesses don't only sell through Amazon or Etsy or eBay or whatever. They're selling through Amazon and NetSuite for wholesale, or Amazon and Shopify or other e-commerce channels, Amazon and QuickBooks. So when you're filing your tax returns and when people are assessing tax, you have to have a process that covers all of these things uniformly, because you don't want to treat tax differently because it's being handled by one platform versus another platform. From the state's perspective, they don't care if you're using Shopify or Amazon or Etsy or whatever. It's a sale to them. It's just dollars and it's a line item. So you got to make sure that, you're getting it right.
Yeah, absolutely. They want you to report everything that you sell.
Sure, absolutely. So yeah, don't assume that just because you're selling on Amazon, your job's done. Because you're making sales anywhere else, your job is definitely not done.
Oh, yes. Okay, so let's really talk risk here. How quickly do states come up after marketplaces that aren't compliant? And are they auditing facilitators more aggressively than traditional sellers now?
Ooh, great question. At some point, we're going to have an ex-auditor on here to talk through some of this. But how people get audited and when is kind of a, black box mystery, which is why you want to keep your compliance tight, because we don't know. They're never going to tell us exactly their formula. But we've seen all kinds of horror stories around how people get caught doing stuff, whether it's people get noticed on random commercials, they get random advertisements and audited. We see that company one gets audited. Auditors looking at their books, they see 10 companies they sold to. Hey, we're going to audit those 10 now. Just being connected to somebody who's gotten audited and get you audited. So it's kind of hard to say when it's going to happen, but just be prepared. So especially if you're doing things like marketplace facilitation, those big dollar things that those states see those use cases, their eyes getting big. So make sure you've, again, read the regulations and done it right going in, because it's hard to ask for grace from the person you owe money to when it's the government.
Yeah, those penalties and interest add up quickly.
Yeah. And, like you said earlier, not knowing is not an excuse.
Yes. I feel like we're going to say that at least 3 times in every episode.
Absolutely.
Yeah, it's a good thing to remember. All right, so we've covered what they are, when you become one, who's responsible for what, and where it can all go wrong. So before we wrap up, give me your take. If a client is thinking about launching a marketplace, what's the very first thing you tell them to do from a tax planning perspective?
Yeah, if you're thinking about becoming a marketplace facilitator, talk to somebody. Go dig into the laws, make sure they give you a breakdown analysis state by state, so you understand the exposure and responsibilities, you understand the thresholds, and you have a plan of action. The worst thing you can do is just go do something and then react after the fact when it comes to sales tax. So definitely be proactive about understanding what those responsibilities are to make sure you can get ahead of it. You've got processes in place.
Good. What would you tell a seller who's not sure if their platform is handling things correctly?
Yeah, come call us. There's tons of people with specific expertise. So go to Google, talk to people in your industry. People know people who've done this stuff or dealt with this, so just ask around. But don't get so boggled down trying to do it on your own that you don't ask for help.
Yeah, ask all the questions.
Yeah, and on the flip side, for folks that are considering working with the marketplace, considering using Amazon or Etsy or eBay, just be sure you're familiar with what Amazon they're going to do on your behalf, what eBay is going to do. Are they going to just pay the dollars? Are they managing the certificates? Do you have to do this and get this report to file this and that on your own? Just understand that they're not going to be your entire tax department. They're going to do one small portion of things, but then get a good feel for what you're supposed to do to bridge that gap.
Yeah. And just as a note, because we haven't actually spoken this yet, TikTok Shop is a marketplace as well.
Oh,
And
yeah.
lots and lots of businesses coming up on TikTok right
Mhm.
now.
And there's lots of places like I don't think TikTok went into things wanting to become a marketplace, but as they sell things and their business change and expand, they're like, hey, we're now kind of back into being this marketplace facilitator. So yeah, folks, definitely be aware of that kind of stuff and be aware that I think Shopify's shop channel is now a marketplace.
Hmm.
Very confusing because that's one sales channel through Shopify, but not all of Shopify is a marketplace, just the shop
Right.
channel. Yeah.
Oh,
So,
yeah. There's so many now: Facebook, Instagram, just
mm-hmm.
all over the place with the marketplaces.
And speaking of those, that's what makes it so much more complicated. Once folks have joined a marketplace like Amazon, and most of these are free to join, it's like, yeah, why wouldn't I go join Facebook's or Instagram? But from the tax side, it just adds more complexity because you're having to marry all this data across different systems and give the state, one clean filing that covers everything.
Right.
A lot to work with.
Yeah, absolutely. Is there anything else that you want to add?
No.
No.
Can taxes be done? Where's the magic wand? How do we
No,
make these?
I know. We need to simplify so much more than this. It's outrageous.
That's never going to change, but we'll be here to help out in the meantime.
Absolutely. So that's all for today's episode of Tax Fun with Taxium. Whether you're listing antiques on a platform or building the next digital marketplace revolution, remember taxes follow the money and the platform. And of course, we end every episode with a dad joke. So here goes. Why did the sales tax cross the marketplace?
Why?
To get collected on the other side.
Hey, these are getting better.
Oh, well, thank you.
Or worse, not sure. But it's good either way.
I feel like they're so bad they're good, right?
Yeah.
We all love a good dad joke.
Yeah.
All right. Until next time, keep it taxable, keep it legal, and keep having fun with Taxium.
Toot, toot, toot.